Hello guys, and glad to have you on board again today. We are going to update our weekly scenarios because that's what we generally do, by the way. Those weekly updates are not there to forecast the market on what's going to happen. It's more importantly setting the guidelines for the global portfolio exposition and what things might be expected to change in the week ahead. Kind of a global motion, and of course with these daily updates we readjust as time passes and new informations are processed, and therefore as we somehow have highlighted some key areas for the week to come, as we reach out those areas or eventually just go in a totally opposite direction, we readjust as we go on. So today we have readjustments to process, and this is the reason why I'm recording this video. So as of what's been said in the weekend, during the weekend, everything was pretty much flowing in motion and letting it happen just exactly as forecasted. So that's why I just simply remain silent. There is no reason to overstate what's been said already. So it was just like time passing by according to the plan and waiting for the execution areas to trigger signals, which they did not until where we are right now. So we do have additional information that helps us processing risk limitations in the areas according to the weekly plans. So the weekly plans still stand the same for me, and I'm just going to readjust as expected, but not changing it entirely, okay? So as for some points, your weekly plan will just be wrong. So at some point, invalidating them might be something to do. I don't necessarily think that today is settling for an invalidation. I think instead, the recent signals we've got, not to mention this one, are still stating that yes, we have the right plan, at least that's what it seems to be right now, technically speaking, but just the wrong timing. Okay, right plan, wrong timing just means we need to change things and not necessarily act as violently as previously expected. Let me explain about that. So first of all, we're still dealing with a ranging context. That's what has been stated over the weekend, and I'm not changing anything about that. I'm just looking for the possible range boundaries. So we had one in here. That's the reason why I got myself short selling the market as a cover trade, marginally short selling the market, still being bullish exposed to this, just taking some cover trades to try profiting from potential downside. That's exactly what happened. The first time I did it was in here and I profit took in this area. Second time is in here and I'm still questioning where to profit take. So yesterday was a question mark for me, and as I had no signals but a profit taking pattern, in here was most likely, okay, I put the stop at break even, and if the market rebounds significantly enough, I'd rather like to lose again, but still take the money to the upside and start selling again according to the weekly plan, 64K or something like that, closer to this trend line and inside the resisting context. That was the plan, okay? So this is not what happened. Instead of rebouncing, we had early reactivation over these previous second range boundary area, but we dipped a toe lower at the end of the day. Huge reverse, markets accelerating, even the stock market had a rough path into the end of the day session. So we broke some cycles, which means markets are trying to accelerate to the downside, still leaving us with a question mark, whatever is the nature of these breakouts. Are the markets accelerating to the downside, creating trends, or is this the timings that the market tried to accelerate on and fail, which brings us yet another range boundary? So that was a question mark until we actually tried to rebalance and then fucked it all up. This could be the sign that the market wants to trend, but still doesn't fit the overall plan. Because normally in order to trend, we need to see a previous range, which we do not. In here, we come from a major high point, all-time highs, and in that perspective, normally if we really want to go bearish out there, we need to reverse these contexts first. And we need to value the third range boundary, so the trending context, in my personal opinion, cannot necessarily happen now. So I still tend to believe that whenever the market tries to accelerate to the downside, it just prints stupid behavior for short-term traders to boast for, and it's basically generally wrong-footing them because the overall trend still remains solidly bullish. So I was confident with looking at buying entries over the nearby areas, just waiting to get proper signals. So these taking profit patterns yesterday led me to believe that we will probably do exactly what we're doing right now, dipping a toe slightly lower, triggering some stupid behavior, and this is probably where I thought we would get the appropriate entry signals. So I was looking for something to comfort me into this feeling, because that was no more than a feeling that I have taking profit patterns. That is something I know can push the market one more time to the downside to create some divergence pattern or exit patterns, but so far I've got nothing. So in terms of momentum reading, the momentum indicator is just reading momentum and waiting for prices to react. So right now we've got nothing, but we had this on the overnight session, and that's really comforting me into this previous scenario. What this thing tells us is that previously we were just having information coming from cyclical reading of the market telling us the market is willing to change the rhythm, to accelerate to the downside though, which could be a good or bad sign. That depends whether you think a trend will emerge out of it or a range boundary, okay? But we had no additional information to orientate one way rather than the other. So it was just more like a finger guessing stuff in which we were just, all right, if you're bullish, you think this is going to be a range boundary. If you're bearish, you say that this is the beginning of the reversal pattern. Well, I think both were equally probable. That's the reason why I'm not trading equally probable scenarios. I'm just letting the market go beyond to trigger more orientated risk limitations in which I have probabilities to go one way much rather than the other. That's what this signal tells me today, because this is a volatility alert just telling me that something more complicated is at play, and it's generally led by volatility boundaries. So this is something most of you guys not really are familiar with, so you really want to step back and let the professionals handle. This is where I switch to volatility readings, okay? Bollinger Bands. So what you have it here is a daily Bollinger Band. It's a Bollinger Band on the daily trend time frame. Remember that the trend time frame is one step higher, the context is 2 time frames higher, okay? So you've got weekly Bollinger Bands in here, daily Bollinger Bands out there, okay? So what we can see in here is you don't really know anything or you don't really know how to read volatility, but I'll teach you the basics, okay? When we are into volatile context, what we matter the most about, the last time we've had a volatility alert was in here, by the way, okay? So here you'll see 2 totally different contexts for volatility triggers, okay? You've got trend volatility, which is basically the standard deviations, which is the distance between those 2 lines, is increasing, okay? As steps moves on, prices are increasing, and volatility, standard deviations, are increasing as well. That's just telling you one thing: the market is going volatile, and it's going to probably trigger trend volatility, which means we're expanding volatility. Here is a totally opposite context. Instead of widening the standard deviation, we're shrinking them, okay? Lines are getting closer one to the other. That's definitely not favorable for trend emergence. So what this thing tells us is that all of the higher time frames moving averages are bullish. This one is still bullish at the moment, and we are shrinking volatility. That's definitely not favorable for a bearish trend to emerge. More favorable, though, for a range boundary to show up. So this is where I have my risk limitation. I'm definitely not going to aggressively buy this market because we still have room to go to standard deviations, though. But I think this area we're dealing with right now is very much more likely to create a range boundary rather than the beginning of a trend. So I'm appropriately waiting for signals. That's just as simple as it is. Of course, those who are familiar with volatility limitations can trade those areas. Those who do not will simply step back and wait for the range boundary to set itself. Anyhow and anyway, it's just going to be a 4th range boundary, okay? It is 1, starting at the market top. We've got a 2nd, 3rd, and 4th range boundary. This is not the most attractive setup unless you are experienced enough to navigate volatile areas, are familiar enough with the standard deviation risk limitation, which most of you guys are not. And more importantly, that's a 4th range boundary buy setup, which most of you guys are not familiar with as well, because that's an expert context. So instead of trying to catch the dip, I'd rather like to tell you something. Just step back for a little moment. The current context is not the easiest one to navigate. So appropriately, risk limit your own portfolio exposition, just stay the fuck back and let the professionals handle the area. We'll let you know as soon as we have something valuable enough. So I'll let you know throughout the Discord through the day. I'll probably send you a notification if I have suitable enough signals to get into this fourth range boundary buyout signals. As of right now, I've got nothing more than just a clue, a early signal that I would like to get confirmed. I need to get some momentum signals, and I think the market is more willing to test these areas. So as of right now, if I get to the H1 timeframe reference chart, here's where I got the volatility boundary surrounded by this support, so it really leads me to believe that 51 to 50K is definitely a supported area. The question is, I need signals. I just can't trade because of volatility boundaries. I've got cycle alignments. I've got everything I need to get to buy this area. But this requires experience because as of right now, no signals. And if you trade without signals, god damn it, you're going to have a little bit of a trouble into trading. So right now, patience is key. Patience is required. Monitoring the market because we're really dealing with interesting contexts. But as long as we do not have price signals, it's just monitoring. So I need you guys to understand that. I'm not acting right now. I'm really looking at it because I think something valuable can come out of this area, but it might take another day. It's not necessarily going to happen today. I definitely think this is for today, but could still somehow outflow till tomorrow and something like that. We're looking for a fourth range boundary, so don't try to play God unless you know how to handle these areas. All right, that being said, altcoins are still handling pretty well at that point. The BTC dominance is stabilizing. Some coins are bleeding out like Stellar, but this is really something I expected for those who were in the live room the other day. We knew that there was a squeezing pattern out there in which we had not enough volatility. Just basically, in a volatile reading of the market, just have a look at the Bollinger Bands in here as well. There was so much shrinking, but just look at it, man. The higher time frames are all bullish. There's absolutely no reason. This means we're trading above 2 standard deviations on the higher time frames. So this is nothing like a bearish market. This is just a market that looks for buyers. And well, apparently these prices that didn't really seem attractive enough for new buyers to jump in. So we might want to look for more attractive prices. But all of these rising moving averages on the higher time frames just suggest we're going to find them rather sooner than later. So I'm not triggering any invalidation at the moment on Stellar Lumens. I'm just getting patient. I just paid a very unattractive price, pretty much average pricing. And well, turns out the market wants more attractive prices, but the overall outcome still stands to be we have to test this third range boundary at some point. And of course, that is significantly rising the probability for this third range boundary area to be resistant now. So I don't think Stellar is going to skyrocket. It could have done such a thing if it pulled up the movement to the upside right there. Now that we're looking for buyers, I think we're going to set ourselves for a longer range and probably the crypto winter we've talked about. So Stellar might be stabilizing over the 0.40 area for much longer. Stabilizing would be the best case scenario. Of course, there's still room for downside deterioration. That's still an option. We're going to talk about that far later on. Right now, still speculative, of course. So if you're into altcoins, you must not be leveraged right now. You must be cashed in. And be patient because we're probably going to range. Try to buy the lowest possible prices and just at least try to make sure you're not buying selling prices. So you can easily highlight that the median price in this range is 0.40. So you must buy at least 0.40 or below. The lower the better, of course, but of course that means the lower the least are the chance for us to get there. If you're targeting 0.22, yeah, sure, we could eventually go down there, but the probabilities are pretty narrow. So the lower the price you expect to get, the lower the probabilities of you to get these prices, of course, comes along. Okay? So try to be rational. We're not trying to catch the dips. We're most likely trying to catch the most attractive prices in a big range, still having a slight positive behavior in the background because of so many supports. All right, so that being said, monitoring the area, let the professional handle the volatility. Don't try to play God. I'll let you know soon enough if we have some things viable enough for you to try jumping in. Until then, Don't be dumb enough to act without reasons to do so. And, well, if you are over-leveraged and panicking right now because you fear of prices going down, well, that means you've made mistakes in the past. This is not nearly what you should have done. You should have profit taken partially much sooner than that. It's not right now, as we are questioning potential supportive areas, that you must act. Okay, profit taking is made below resistances. We've highlighted those resistances long ago. You knew the areas. If you decided not to act because you were too greedy, well, now you are paying for the consequences. And maybe the next time you listen to the valuable things I share with you guys. Partial profit taking is not limiting your gains, it's just securing those gains. I never said get the fuck out of Bitcoin and just sell it all. I always told you partial profit take at 25 to 33% might be rational, most importantly if you have used leverage position to the upside, because now we no longer have upside potential. We're limiting the potential gains and the risks are rising. So it is an appropriate time to reduce exposition to this market, not switching from bullish to bearish like everyone is doing right now and is totally stupid. Of course, see you guys later. There will be another update probably during the weekend. I don't think there will be another tomorrow, but if things radically change from what's been said today, of course there will be one. I'll keep you posted into the Discord as well, of course, depending on the tradable signals that comes out of this area. Bye guys.